Welcome to Illuminati Silver. We tell the truth about silver. Today is Friday the 10th of September 2021, and we're producing our gold and silver morning update and price forecast. Yesterday, the European Central Bank said it was not tapering its bond buying program, as it announced it was going to buy less bonds in the final quarter of this year than it has done previously. So what does that mean then? Work that one out. The result, very short term, is slight dollar weakness in the basket of currencies, so we've seen the dollar index fall slightly, which has acted as a tailwind behind gold and silver, pushing them both back again above major support levels, which were becoming resistance levels. So let's take a look. Welcome to Illuminati Silver. It's Friday, 10th of September 2021, 09:30 a.m. GMT +1. The weather is atrocious. Rain pouring, slight wind blowing, and not a blue piece of sky in sight. But also, the UK economy is atrocious. As we can see by the headline in Bloomberg this morning, UK economy's coronavirus rebound grinds to a halt in July. Why are we talking about the UK? Well, we come from the UK, but also it might be a forerunner of what's going to happen elsewhere. The UK economy barely grew in July, suggesting the recovery from the coronavirus recession is rapidly levelling off as consumer spending weakens and supply disruptions hamper production. And we've seen similar situations in the United States and around the world. Gross domestic product expanded just 0.1%, a tenth of the pace posted in June. Economists surveyed by Bloomberg had expected 0.5% growth. The figures left output 2.1% below the level in February 2020, before the pandemic struck. The slowdown heralds a return to more normal growth rates after pent-up demand following the lifting of restrictions in the spring saw the economy surge by almost 5% during the second quarter. And this to some degree is why the central bankers are saying that they envisage inflation to be temporary, because they probably had an inkling that the economy was not going to be robust, demand was therefore going to fall, or at least not rise in line with some pundits were predicting, and as a result, we may very well find that inflation drops because of lack of demand. Demand led potentially deflation, which is what is actually being discussed in some corridors of power. We shall see if that comes about. Stocks, US futures rise as tapering worries ease. Now, we'll see in a few moments that the American markets were down yesterday, but this morning things seem to be picking up. Global stocks rebounded and US index futures rose as investor concerns eased about stimulus tapering by central banks and China's regulatory crackdown. Markets have fluctuated between hope and despair as the continued spread of the coronavirus undermines economic recovery and boosts supply shock inflation, even as central banks reaffirm an accommodative stance. The US equity benchmark is heading for the biggest weekly slide since July 16, threatening to make September the first loss-making month since January. So, if the economy is not growing, how can we have tapering? Well, the ECB surprised us slightly yesterday. ECB slows crisis stimulus in shift, Lagarde says isn't taper. The European Central Bank will slow the pace of its pandemic bond buying program in the final quarter of 2021. Now, most of us, in fairness, were expecting this to happen in early 2022. A shift, President Christine Lagarde insists, isn't a move heralding a wind down in stimulus for the euro region's still vulnerable recovery. The lady isn't tapering, she told reporters in Frankfurt. And that's really a mock for those of you old enough to remember Margaret Thatcher saying, "The lady's not for turning," when they wanted her to change her economic policies. The lady isn't tapering, she told reporters in Frankfurt, describing the ECB's decision on Thursday as a recalibration of the pandemic emergency purchase programme for the next 3 months. Lagarde spoke after the Governing Council decided it will conduct purchases at a moderately lower pace than the roughly 80 billion euros, or the equivalent of $95 billion, of monthly acquisitions deployed in the past 2 quarters. She justified the decision by saying the euro region's increasingly advanced rebound could be maintained with less monetary help. Well, we shall see if that actually occurs. Reuters headline: spread of Delta COVID-19 knocks wind out of UK economy. We won't go into that now because we want to keep this video relatively short. And of course, BBC: UK economic growth slows sharply. Rail industry urges workers not to spurn the train. And Bowden boss declares the end of formal office wear. And look at this. If you want to go to college for free, Amazon offers to pay college fees for 750,000 staff. Now that could be worth a pretty sum if you can put up with the conditions working at Amazon. In America, Biden requires vaccines for millions of US workers. Biden administration challenges Texas abortion law. Top US court halts Texas execution over religion. So, what's going on financially? Let's take a brief look. Dollar is down slightly. Not surprising, because this index is part of a basket of currencies. And we should certainly see that if the ECB is not tapering, but is tapering, of course the euro is going to rise against the dollar. So you've got the dollar index 92.34. We still think it's going to strengthen in time. Energy, up $1 broadly. $1 a barrel or just over for WTI and Brent crude. We'll cover more of this in tomorrow's weekly update. Looking at markets yesterday, American markets down broadly 0.5%. But overnight, Asia Pacific rebounding strongly, up between 1.25% and 2%. And also UK and European markets up this morning 0.25% to 0.5%. Now, economic data, we said this week was pretty lackluster, but to watch out for the initial jobless claims, and we can actually see that they are, in fact, lower than expectations. They're down to 310,000 for this particular week. But we did mention in yesterday's video, of course, consumer credit was also down, which potentially suggests lower spending. Now today we have the producer price index. In July it was 1%. They're expecting 0.6% in August. Anything higher than that suggests inflation is taking hold, certainly on things like raw materials, costing therefore producers more money to produce. And we have the wholesale inventories, but that's the revision for July. To be frank, a little outdated now in our view. So what's happened to gold and silver? Over the last 24 hours, gold is up $7. So it's moved, thank goodness, once again above the 1800 level. We've said time and time again that for us to have any springboard in gold, it must hold this $1,800 level. Because once 1750 is lost, we're on our way down to 1500. So that is why 1800 and 1750 are such crucial levels. So it's up $7. Silver's also up, and that's up 13 cents in the last 24 hours. Again, now managing to hold above $24. It has been as low as $23.96, but again, the demand is pulling it back up. Cryptocurrency markets generally rising again. We now have the market cap above 2 trillion. It's now virtually 2.1 trillion. And just to look at the sort of 24-hour volume here, you've got $134 billion being traded currently. Just for those who may not be aware, and this is an interesting addition to this site, exchanges, there are 406 exchanges, and wait for it, 11,789 cryptocurrencies. Which ones will go to the moon? Well, you've got a lot to choose from. That's it for now. We're going to provide our weekly update tomorrow. Please don't miss it. It'll be repeated on Sunday under a different thumbnail because we're still doing the testing. We're also going to do another video of the weekend. I won't mention what it's about, but keep your eyes out for it, and we'll probably publish it, I think, more likely on Sunday. Meanwhile, have a great day, everyone. Please give us a thumbs up, subscribe, press the bell sign. Until tomorrow. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.